You're paying a lot for your insurance plans, often six figures a year. But for what exactly? Too many high-performing Filipino professionals are overpaying for underpowered coverage, paying hefty premiums on a thick stack of high-fee policies with unnecessary riders and vague benefits. And with multiple policies, premiums can be shockingly high, while actual coverage is thin, redundant, or misaligned. If this is you, and you're tired of that nagging feeling you're not getting your money's worth from your insurance, this episode was made especially for you. I'll walk you through the simple insurance audit I use with clients that cuts total costs by 50 to 70% while increasing coverage 3 to 5 times. No gimmicks, just common sense and clarity. In one focused audit, we'll total your premiums, map your benefits, expose redundancies and thin coverage, and reroute wasted pesos to what matters to you. Do this once, and the savings and clarity will compound every year. Less drag on your cash flow, more protection per peso, and more money for your real priorities. Building on last episode's point about how money feels calmer with clear direction and a simple system, today we're adding the defense layer, insurance, so your plan is protected and you stop paying bloated premiums for thin benefits that steal from bigger goals. In this video, I'll show you a clear 5-step check to surface waste, gaps, and overlaps so that cost finally matches coverage. By the end, you'll know exactly what you pay, what you get, and where to cut, with quick examples so you can do it today. It's the same system I use with clients to replace overpriced plans with lean, high-impact protection without weeks of research or overwhelm. If this hits home, grab my free PDF, The Insider's Insurance Audit Playbook. In 1 hour, you'll know what to keep, upgrade, or drop without losing protection, and you'll free up cash to fund your other goals faster. Link is in the show notes or in the description below. Now, I'd like to discuss how high performers accidentally build a messy insurance drawer. Here's the typical path of a high-performing Filipino professional. First job, someone sells you a starter policy. Usually, this is framed as, maganda ito for savings. Then you get a promotion, or married, or kids, and you add another policy for protection. And then you buy a few investment type policies along the way because it feels wise and you don't want to miss opportunities. Different agents, different companies, different jargon, and usually no one is responsible for the overall design of your insurance portfolio. You end up thinking, ang dami kong binabayaran, but I don't know if it's enough, too much, or misaligned. You're not alone. Policy clutter happens to so many high earners because your coverage was never integrated into a bigger plan. It just accumulated over 5, 10, 15 years of saying yes to people you trusted, and the high costs quietly crowd out your higher priorities and aspirations. This is why we audit, to replace a sales-driven pile with a plan-driven structure. Here's how I teach this at Beacon. Buy the least insurance that fully covers the real risk. Nothing more. We call this minimum effective coverage. You pay only for protection that moves the outcome and strip out anything that adds cost without adding meaningful cover, and keep every peso working hard for you. 3 simple rules keep this honest. First, separate protection from investing. If you want growth, use real investing. Don't mix the two together. Insurance is for catastrophic what-ifs, not for chasing returns inside expensive wrappers. Second, judge your plans by the benefit-to-premium ratio. This is also known as your coverage per peso. Ask yourself, how much real cover do I get for every peso I pay in premiums for this plan? Which means you divide the total basic coverage, excluding riders, by how much you pay in basic, not total, premiums. The higher the number, the better. If a policy or rider gives weak cover for high cost, it fails. And third, product last, plan first. Start with the risks and amounts you actually need, then find the cheapest clean structure that does that job. If you can't explain what job each policy does in one line, you're paying for noise. With minimum effective coverage as our lens, let's run the same 5-step audit I use with clients so that cost finally matches coverage and every premium peso pulls its weight. Here's the 5-step insurance audit framework. This is where you move from anxiety to clarity, and you don't need to become an insurance expert. You just need an executive level review process. But before we start step 1, get the one-page checklist from the Insider's Insurance Audit Playbook. It mirrors this 5-step audit with blanks you can fill as you watch, so you get results in the next 60 minutes. It's free. The link is in the show notes or in the description below. Let's go to step 1, gather. You can't optimize what you can't see. Professionals know this applies not just to projects at work, but to policies as well. So gather all your insurance policy contracts or log into your online insurance portals if they're available, and then consolidate your policies into a single list and capture just 6 details for each policy. Are you ready? First, the company and product name. Second, the basic type, like is it a term plan or a whole life or traditional plan? Is it a VUL, a variable insurance plan? Is it company coverage, an HMO, etc.? Third, list down the annual premium. If you pay monthly, simply multiply by 12, quarterly, multiply by 4, semi-annually, multiply by 2. Standardize everything by the annual premium that you pay. Fourth, write down who it's meant to protect. You, perhaps, your spouse, your kids, your mortgage, or your business. Fifth, write down even a rough idea of the benefit that you're getting. So as you look at your contract, this is called the sum insured or the sum assured or the coverage amount. And finally, number 6, write down how much is the current cash or account value of each policy. Now, please keep a running total of your annual premiums as well. And if you're unsure about some details, that's perfectly fine. Leave them blank for now. This is just a first pass to create visibility. Step 2 is to map. You now need to map each policy on your list to a specific what if. And there are 4. What if I die early? What if I get a major illness? What if I'm hospitalized often? What if I get into an accident? Then next to each policy, write the one what if it's supposed to handle. Then scan for overlaps and riders that duplicate what you already have. If you can't map a policy to a clear what if, that's a red flag. Not automatically bad, but unclear. And unclear means you might be paying for something you can't explain. Before we move on, you can set a simple insurance coverage target so your numbers are anchored. You can ask, if I weren't here tomorrow, how many years of household expenses do I want covered? Then you can add the big one-offs you'd fund, like maybe part of the kids' education, key debts you'd clear, and any obligations you don't want to leave behind. Again, you don't need precision here. You just need a ballpark so we can compare needs versus benefits credibly. Step 3, check. Start by computing the benefit to premium ratio or BPR for each policy. How do you do that? Well, use the base coverage only, no riders, and divide it by the base annual premium. Again, excluding rider premiums. That number tells you how much coverage you get for every peso you pay. Higher BPR means better value, while lower BPR means you're likely overpaying and can get more value elsewhere. A quick example. Let's say you have 1 million pesos base cover and you're paying 40,000 for that policy. So, 1 million divided by 40,000 gives a BPR of 25. A similar policy with a 16,500 premium yields a BPR of 61. So this one has better value than the first. Finally, flag any riders that add cost without meaningfully increasing cover and carry them into step 4 to upgrade or drop. Which brings us to step 4. Decide. Decide whether to keep, upgrade, or drop. This is where we make the portfolio lighter and stronger. We're not dropping everything, okay? We're aligning coverage and cost with your life now. And you can use a simple 2-question test. First, does this policy cover a real risk I still care about? And second, does it do that job efficiently given my age, income, and obligations today? From here, mark each policy green, yellow, or red so you know exactly what to do next. Green is for policies you want to keep. If the answer to both questions is yes, keep it. It has a clear job, adequate cover, and good protection per peso. For yellow, upgrade. If the risk is valid but the policy is undersized, inefficient, or outdated, upgrade it. You might replace or restructure it first, and then retire the old one after. Finally, red means you drop it. If there's no clear job, it duplicates another policy, or the benefit is too small for the price, just drop the plan. Now, I have one safety rule before you drop any plan. Only do that after you get replacement coverage and that is approved and in force. Don't do it earlier. Now, all in all, think of it this way. We remove noise, we keep the muscle, and we upgrade what's weak. So you end up paying less for protection that actually pulls its weight. Finally, step 5, estimate and reallocate. This is the upside most people miss. Every peso you pay in premiums is capital, and capital should serve your plan. The goal isn't to pay the minimum, the goal is to pay the right amount for the right structure. So after you've tagged each policy green, yellow, or red, estimate your savings. Tally the next 12 months of premiums you can realistically free up as you upgrade or drop policies, and note the multi-year impact across remaining terms. If this cleanup will take 12 to 24 months, project savings per year so you can plan them on purpose. Now you can pre-decide where those pesos will go. Will the freed up money from your plans fund your emergency fund? Or help you pay off debt faster? Or accelerate your goal-based investing? Or boosting thin but necessary protection? Then you can update your cash flow plan and automate the allocations where you can so the savings don't quietly leak away. Then you can set a 12-month review on your calendar to rerun this audit quickly and keep premiums aligned with your life. That's how you convert an expensive puzzle into a strategic line item inside your goals-based system. You get more protection per peso and more money flowing to what matters most. That's the audit. And with steps 1 to 5 done, you can keep the whole process fresh in 30 to 60 minutes using the pocket checklist later in the episode. So, that's the audit. Now turn those green, yellow, red tags into freed up cash with the Insider's Insurance Audit Playbook. Use the reallocation worksheet inside, then route your savings to your priorities. It's free and takes about an hour of your time. You can download it via the show notes or in the description below. Now, as a quick recap, here's your compact insurance audit checklist. First, gather. Pull all your policies into one place, whether physical or digital, and for each, indicate the company and name, type, annual premium, who it protects, rough benefit, and your cash or account value. Second, map. Determine which, what if, each policy handles. Third, check. Check for coverage adequacy and your benefit to premium ratio. Spot thin benefits and overlaps. 4, decide. You have green for keep, yellow for upgrade, red for drop. In that order. And don't forget, observe my safety rule. And finally, 5th, estimate. Add up premiums for yellow plus red. That's your potential freed up cash from your optimization. Do this once in the next 7 days. If after that you feel, okay, I see the issues, but I'm not confident deciding next steps, then that's probably the moment to bring in a coach. If this helped you see your finances more like a strategy problem and less like a pile of random decisions, consider subscribing on YouTube or following the podcast for more conversations like this. Also, we're putting every episode in this series in one place, the Optimization Deep Dives playlist. You'll find the playlist link in the description if you're on YouTube or in the show notes if you're listening on the podcast. So you can go through the series in order and come back anytime you need a reset. In the next episode, we'll talk about emergency funds and buffers. Because for high earners, feeling safe isn't about hoarding cash. It's about designing buffers that protect your plan without slowing your goals. I'm Mon from Beacon Wealth Advisory, and I'll see you in the next episode.